All right. So I hope I'm clearly audible and welcome back to the series, guys. Today we are going to continue our series in which we are covering the chapters from the very famous book on trading psychology by Sir Mark Douglas. And we are on the final chapter here because after that you can see there is this final note only. So we are on the 16th chapter, that is the step to success. So in the last video we have already covered the psychology of price movement. So here we are just going through the chapter and we are trying to get the idea of the chapter, and then we have to think about it in detail, and we have to take the action, and we have to act on the working steps to be very precise. All right. So let's go ahead with the final chapter and let's see if we'll be able to cover it in the same video, or maybe it will require more videos, like more than one video. So because it is more than, I think, around 18 pages are there. So let's see how long can we go. Otherwise, we will cover it in the next video as well. So let's begin without any further ado. So far we have already talked about these many things. We started with why we need to learn how to adapt, the dynamics of goal achievement, managing mental energy, techniques for affecting change, and now we are on the fourth unit. We have already talked about the psychology of price movement, in which we talked about more technical things like you know support, resistance, and then we talked about trend line and other stuff, and how the price actually moves, how the sailors work, how the sellers work, and how the you know buyers, they act in the market. And now it's the final step that we are on. So let's just right dive into it. So it's 1 page 66, right? If you want me to cover the previous chapter, like before 10th one, how memories, association, and belief manage environmental information, and before that the you know these all chapters, if you want me to cover, I can do that. You can just drop the comment in the comment box, and I'll look into it and I'll see what I can do about it. Okay, so yeah, here it is. So yes, be ready with your notebook and pen. And as you know, I just directly copy paste stuff in my PPT itself. So if you want the link of that PPT, again you can ask it to me again through the same steps in the comment section, or in the in the comment section only, basically. All right, so let's move ahead. The step to success. Self discipline is simply a mental technique to stay focused on what you need to learn or do to accomplish your goals. There will be times when you won't have the resources to function effectively related to the external condition. Other times the resources you do have will be in conflict with both the condition and your goals. So to accomplish your goals, you'll need to adapt. In other words, you will need to change the way you interact with the environment. To change your behavior and how you experience the environment, feelings and emotions, you'll have to change your perspective. To change your perspective, you'll have to change the mental components that affect your perception of environmental information. Keep in mind that you can't physically control what the markets do. You can only learn to control your perception of the markets to share the highest degree of reality, the least amount of distortion with everyone else who is participating or has the potential to participate. The more sophisticated you become as a trader, the more you will realize that trading is completely mental. Yeah, I always say that. It isn't you against the market, it's just you. All right, all the other traders participating to make the most market provide you with an opportunity to make money from their divergent beliefs about the future. If people didn't disagree about the future value of any particular commodity or stock, then there will be nothing to compel them to either bid a price higher or offer it lower, and the opportunity to profit from these changes would cease to exist. So the market just offer the individual trader opportunity. They don't choose the data on which you focus your attention, and they certainly don't interpret the data you perceive. Nor are the markets responsible for what you can't perceive because of the distinction you haven't learned to make yet. They also don't choose when you put on a trade, how long you stay in, when you get out, or how many contracts you buy or sell. Each individual trader creates his own experience of the market based on his picking and choosing process and the decisions that result. If you accept this concept as valid, then the implications are that You'll never have a valid reason to blame the markets for your unsatisfying results. The markets don't owe you anything, regardless of how hard you work to be successful, because every other trader participating is doing so to take your money away. So you and you alone are completely responsible for whatever you end up with. The sooner you accept that responsibility, if you haven't already, the easier it will be to identify what skill you need to learn to interact with the markets more successfully. Even if you can't identify the mental components responsible for what you ended up with, at least by assuming that you are responsible, you will be opening yourself up to finding out the things where you are lacking in, basically, right? So first of all, you have to be accountable. I have learned this, in the previous chapters as well. So in generally, like, even if you are not trader, still in your life also be accountable, because when you become accountable of something, then only you're open to changes, you're open to adaptation, you're open to growth and success and stuff. Otherwise you are just being resistant, you're just ignoring the very fact that is lacking in you. You're not even, confronting it in one way or another, and that is a much needed thing if you really want growth. If you just want to sail around in the same manner that you're sailing now, that is completely fine. You can do that as well. It's your life, it's your choice. To be a successful trader, you need to trade without fear. As you have already learned, when you use fear as a resource to limit yourself, you will create the very condition you are trying to avoid. Or to say this another way, you'll experience your fears. Now, this is something that I find important, so I'll take a note of it. And for doing it, I simply, put it in the PPT that I'm making, like the short summary PPT of each chapter that I'm doing from past few, what I can say. Hmm. All right, now let's move ahead. You also can't learn anything new because fear will force you to perceive the environmental now from your individual past. You'll experience that past regardless of the opportunities the environment may have to offer in that same moment. Your individual history will repeat itself until you change your history, which will, that is also important, right? These sentences, they can help you very much to shape your mental environment so that you can work on it and you can ultimately get the success or the results that you're desiring for. Okay. Now, which will then allow you to learn and experience something new. Evolving beyond your fears is also the best way to learn how to predict market behavior. Hmm. The more fearful traders are, the fewer the choices they perceive as available to themselves, and the easier it is to predict their behavior. You'll be able to recognize this clearly in others when you recognize it yourself and work your way out of the condition where you trade with fear. However, you'll need some resource to limit yourself so that you don't get reckless. Getting reckless is exactly what people have a tendency to do if they don't feel any fear, especially if there is a potential for thrilling results that there is in trading in general, right? Mhm. The resource you need to limit yourself is self trust. You'll gain that self trust when you establish a set of rules and guidelines to trade by, and know that you will always follow these rules without hesitation, regardless of the temptation to do otherwise. Hmm. That is again important, much needed thing. Because for me, if I have, I don't think I told you about that, but if I'll talk about my trading journey so far in last few months, so for me, I had more green days than red days, but at the end of the day, I am, you know, having net loss, because when I am losing discipline, I am ending up with, large sum just going out of my pocket, and that too in a snap, right? So it is as easy. You'll gain that self trust when you establish a set of rules and guidelines to trade by, and know that you will always follow these rules without hesitation, regardless of the temptation to do otherwise. When you are in market, there are a lot of temptation. There is this fear of missing out. Most of the time, I have found myself among the traders who have this fear of missing out a lot of times. Outside the market, I'm thinking a lot of, like, I'm thinking a lot differently, and when I'm entering, there is this whole different me that is trading, right? So again, the result that I'm desiring for, it will not be there, right? Because I'm not playing by the rules that I made for myself, right? Once you trust yourself to to always do what needs to be done, there will be nothing to fear because the markets won't be able to do anything to you. As a result of your inability to respond appropriately, consequently with nothing to fear, you're then free to observe the market, free of distortions. There won't be any need to avoid certain categories of information because of how that information will make you feel. The less reason you have to avoid or distort information, the more you make yourself available to learn about the nature of the markets. The more you learn, the easier it will be to anticipate what the market will do next. If you can accurately anticipate what will happen next, the easier it will be to give yourself more and more money, notwithstanding any mental components that would argue against giving yourself more money. It is very important for you to understand that these new insights about the market behavior will come in stages as you learn to trust yourself more and more. There is no get rich quick scheme being offered here. There are enough rags to riches to rags stories to attest to the fact that get rich quick doesn't work anyway. Getting rich quick can only lead to a great deal of anxiety and frustration if you don't have the skills to keep it. There isn't much point to making a lot of money if you are susceptible to making that one trading error that can give it all back plus more. Once you have made a fortune and lost it, the psychological work that you will need to do to get it back is enormous compared to work that is necessary to keep yourself from losing it in the first place. As a trader, it is more important to know that you will always follow your rules than it is to make money, because whatever money you make will inevitably lost back to the market if you can't follow your rules. And I am a I can testify that I'm like I can testify this very statement, and that is a much needed thing. Rules are at the core. Rules can be anything. It can be according to your trading style and your goals and stuff. It needs to be in terms with the market first of all. Okay, you also need to understand that your rules will change as your understanding and insights evolve. Many people don't Many people don't like to establish trading rules because they believe that once made, they can't be changed. Any exercise that I offer you or rule that you select to guide your trading behavior is only transitory. They are methods and techniques to get you beyond certain fundamental stages of development so that you can recognize for yourself their value and what you need to do next to be more successful. In fact, a good rule of thumb to use to determine your readiness to move beyond a certain rule or exercise and to the next challenge is the recognition that you can do that. You can do what your set you set out to learn so well that is become that it becomes second nature. Otherwise, keep working at it until you don't have to think about it any longer. Step 1, staying focused on what you need to learn. Okay. First and foremost, you may need to change your perspective or the focus of your trading. Until now, your focus may have been to make money. If this is so, you will need to change your perspective. What do I need to learn, or how will I have to adapt myself to interact more successfully? You need to stay focused on mastering the steps to achieving your goal and not to the end result. Making money is a end result, obviously. Knowing that the end result money will be byproduct of what you know and how well you can act on what you know. Okay, control C, control V. All right. There is a tremendous difference between focusing on money and focusing on using your trading as an exercise to identify what you need to learn. The first will cause you to focus on what the markets are giving you or are taking away from you. The second perspective causes you to focus your attention on your ability to to give yourself money. With the first perspective, you are placing some of the responsibilities onto the market to do something for you. With the second perspective, you assume all the responsibility. You are being accountable for your deeds. Right. Always keep in mind that each moment is a perfect reflection of your level of development. If you look at each moment that things don't turn out as you want or expect as a mistake, then you'll usually cut yourself off from the inside about yourself, contained with each moment. The reason why we will cut ourselves off from this information is because we typically associate mistakes with pain. We have learned about it in the previous chapters. We'll instinctively avoid pain, and in doing so, also avoid what we need to know about ourselves to interact more effectively in similar circumstances in the future. To evolve beyond pain and our fear of mistakes, our mistakes have to be resolved, right? This could be a big task, and you may. Okay, just give me 1 second. Hmm. This could be a big task and you may not want to tackle it at this time. So, what you will need to do is to build a corollary framework to place all of your trading experiences. This framework needs to be defined in such a way that all experiences are valid and have meaning, and as such, mistakes don't exist, they just point the way. As part of this framework, you may also need to change your definition of a missed opportunity, except for the inability to accept a loss. There isn't anything that has the potential to cause more psychological damage than a belief is missed opportunity. Missed opportunities are traits that would have always turned out perfectly because they only occurred in your minds, where we can make anything be as we want it to be. Of course, we would have responded exactly as the condition warranted without flaw. The problem is, we didn't do it, and the resulting sense of loss we feel is difficult to reconcile. Therefore, these missed opportunities traits have the potential to cause more anxiety and stress than the traits we actually do take that turn out to be losers. Nothing's worse than missing a perfect opportunity. However, if you could have, you would have. It's that simple. The sooner you accept this, the sooner you'll be able to take advantage of these missed opportunities instead of beating yourself up over them. Besides, there really isn't anything to miss because the markets are in perpetual motion and will continue to be until everyone agrees on value. As long as the price keeps changing, there will always be another opportunities. So, FOMO, this is the answer for FOMO. Hmm. When you start trading from the perspective that mistakes don't exist, you'll be amazed at the sense of freedom you'll feel to grow by accepting your results as a reflection of who you are in the moment, in that moment, which then allows you to determine what you need to learn to do better. When you release the energy out of the belief that it is possible to miss anything, you'll no longer feel compelled to do something like getting into trades too early or too late. Right. It happens. In other words, you will be giving yourself additional choices. Not doing something is often the most appropriate choice where only one choice existed. You need to constantly keep, just give me a moment. Choice existed. You need to constantly keep in mind that the professional traders from whom you are trying to extract money already know and are using many of the principles put forth in this book. They understand the concept of objectivity, have learned how to trade without fear, and know how to execute their trades properly. Before you can begin to take money out of the markets consistently instead of the markets taking yours, you'll also have to learn these skills. So I would suggest you that you set a certain amount of trading capital as tuition for your education. How much you set aside will be a function of how many skills you need to learn. What is most important is that you make a firm commitment to your education as a trader, even if you have been trading for years and you are successful, but not as successful as you would like to be. Setting aside money that you will trade with an exercise to learn some needed skill is a very powerful symbol of your commitment to learning that skill. The stronger your commitment, the faster you'll learn. Step 2, dealing with losses. Trading rule 1. Predefine what a loss is in every potential trade. By predefine, I mean determine what the market has to look like or do to tell you what the trade no longer represents an opportunity, at least not an opportunity in the time frame in which you trade. Okay, trading rules. Just give me 1 second. Rules and okay. I need to highlight that it seems. Underline it and change the color size. Well, yeah. Hmm. Yeah. If you're wondering what I'm doing, so I'm just, writing down certain things as a short notes. Hmm. Predefine what a loss is in every potential trade. By predefine, I mean determine what the market has to look like or do to tell you what the trade is. That the trade no longer represents an opportunity, at least not an opportunity in the time frame in which you trade. It is very much needed, and you have to stick to it, right? You should know if, for an example, let's say you entered because of the momentum, and if you're not getting the momentum in next candle, that means the logic by which you entered is already over. So you should be out of the market as soon as possible. When your beliefs about losses are restructured, the possibility of a losing trade will not create any threat of pain. Most successful traders restructured their beliefs about losses after they lost one or more fortunes. They experienced their worst fears about losing and then come to the realization that they didn't have anything to fear if they just did what needs to be done. What needs to be done? Confront the possibility of being wrong and consequently not avoid the inevitability of taking a loss. So confronting and accepting the inevitability of a loss is a trading skill. Certainly a skill learned the hard way for most, but nevertheless an essential component at the foundation of virtually everything you need to learn to become a successful trader. The relatively few successful traders in the market today did it the hard way. You, on the other hand, have the opportunity to do it much more easily. There will be two mental components at work to help you acquire this skill. First is your understanding of why it is so essential to confront the possibility of a loss. If you don't, you will generate fear and end up creating the very experience that you are trying to avoid. So when you are clear with why, so most of the time you do the right things. So that's why you need to predefine loss. Because if you'll not do it, then there will be a fear that is getting generated, and ultimately you'll end up, you know, making that fear true, and that is basically losing money, right? Hmm. When you really understand this concept, it will become unacceptable to you to trade from the old perspective of loss avoidance. All right. The second is your willingness to change your definition of what is it means to lose. By using some of the mental exercises in chapter 14, you can change these definition by using your thoughts instead of having to lose everything or practically everything you own to get the same place. That place's losses do not diminish me as a person. The sooner you believe it, the easier it will be to identify and execute a losing trade. By making the execution of a losing trade an, at an automatic function of your trading strategy, you make yourself psychologically available to take advantage of the next opportunity, even if that opportunity in the same direction of the losing trade you just got out of. Nice. Trading rule 2. Execute your losing trades immediately upon perception that they exist. Execute your losing trades immediately upon perception that they exist. When losses are predefined and executed without hesitation, there is nothing to consider, weigh, or judge, and consequently nothing to tempt yourself with. Never try to cut short your losses. Okay, let me let me talk about that in more details so that I'll give you a clearer idea what I'm trying to say over here. So by saying this, what happens now when you enter in a trade and you set a mental SL, you're not putting it in system, because if you're putting it in system, it will cut that for yours, like it will cut that for you. But if you're not doing it, you're putting a mental SL. Let's say you decided in the previous candle's low, I'll get out of the trade, right? If the market or the price will go to that point, and let's say you decided at EMA, if the price will go beyond EMA, below EMA, I'll get out of the trade. But when in reality it happens, no, you have already seen a certain amount of loss, and now the market is going opposite direction of yours, and you will be like, okay, it has already moved in a certain direction. I'll wait so that it will come a little bit up, like it will reduce my loss, so that I'll cut short the loss. But it happens, and when it will happen, no, you'll not be able to cut it. Why? Because as you see the loss is getting reduced now, in the short period of time your mindset will be like, okay, so the loss is decreasing, it has more possibility that it will go, it will uh, what I can say, recover more, or it will make my loss even lesser, or it may even come to break even, it may go to profit as well. So the hope is getting associated to it rather than the logic. So now you're not looking at the market objectively, so you're losing the control of yours over the market. So at that time, if you're doing it in a longer run, it will be problematic for you, right? There will be no threat of allowing yourself the possibility of ultimate disaster. If you find yourself considering, weighing, or judging that, you are either not predefining what a loss is, or you are not executing them immediately upon perception, in which case, if you don't and in turn it turns out to be profitable, you are reinforcing an inappropriate behavior that will inevitably lead to disaster. Much needed thing, right? So even if you'll win in that particular trade, no, in longer run it will be problematic for you, because now you're reinforcing yourself that inappropriate behavior can give you profit, and ultimately next time when it will not be able to give you profit, then it will turn out to be a big loss. So I'm understanding the logic behind the things that is happening, why it is important to act in a certain manner. Or if you don't and the loss worsens, you will create a negative cycle of pain that once started will be difficult to stop. The next error after letting a loss get out of hand is usually not taking the next opportunity, which invariably is always a winning trade. After which we get so angry at ourselves for passing up the opportunity that we make ourselves susceptible to any number of other trading errors, like taking a trade that was a tip from another trader, which invariably is a always a loser. It is important for you to note that once you completely trust yourself to cut your losses, you'll eventually get to the point where you may not have to predefine what a loss is. There are traders who have reached a such high degree of objectivity and trust that they can get into a trade and know when it is a loser without having to predefine it to themselves. They let the market define it for them based on their comprehensive knowledge of the various participants involved and their knowledge of the various relationship between price, movement, and time. However, the reason why they are able to learn what they know about the nature of the market is because their focus of attention widened to include more undistorted information, leading to greater insights. Once they learned first, however, to trust themselves. Keep in mind that fear is really the only thing that keeps us from learning anything new. Okay, why? Control C, Control V. Mhm, mhm, mhm. Okay. You can't learn anything new about the nature of the market behavior if you are afraid of what you may do or can't do that is not in your best interest. By predefining and cutting your losses short, you're making yourself available to learn the best possible way to let your profits go. By predefining and cutting your losses short, you are making yourself available to learn the best possible way to let your profits go. Step 3, becoming an expert at just one market behavior. Generally, most of us grow up believing that when you have to make a decision, the more relevant information we can gather, the better our decision will be. This isn't necessarily true with trading, especially in the beginning stages of one's career. In most market situations, there is an even number of traders who have a propensity to buy and those who have a propensity to sell, or those who need to buy and want someone to take the other side of the transaction, and vice versa. Everyone will have his reasons and rationalizations for all the trading or all this trading activity, creating about as much conflicting information as there are participants. Because there is so much information, and because so much of that information is conflicting, the beginning trader will need specifically to limit the this his awareness of the market information to which he allows himself to be exposed. More is not better. It just creates confusion and overload that will ultimately lead to loss. So keep your trading strategy also simple, and on what basis you are entering the market, keep it also simple. I've talked about it in one of my, what I can say. Okay, all right. I've talked about it in one of my live trading videos that earlier I used to have a lot of indicators in my indicator template, right? I am using EMS, both EMS 9 and 20 EMS. Then I'm using volume. Then I'm using VWAP. Then I have support and resistance working for me. Then there is this, you know, Bollinger Band. I'm using that as well. Then there is ATR. Then there is RSI. So I'm using 6 to 8 indicators, and not just that, after this also I'm trying to get another thing. So it can lead to two possibilities. One is it will hazel your way of perceiving the right opportunity, because in one of the indicator you're saying, okay, this is the opportunity that I have to enter on, and just on the basis of that one indicator you are entering, you're not getting confirmation from any other one. So you're not getting expertise in a particular indicator, like how exactly it works and how useful it is in under different circumstances. This is one possibility. And the other one is, since there are a lot of indicators, they are contradictory in their nature. So from 9 and 20 EMA, if you're seeing there is one entry, but RSI is telling you something else, ATR is telling you something else, the other story. So in that way, you'll lose the confidence and you'll lose the right time to enter in the market. So it can also happen, right? So you need to start as small as possible and then gradually allow yourself to grow into greater and greater amounts of market information, right? So you have to start from something easy, then as per the need to basis, then you can add on more information. What you want to do is, I'm not saying that you have to be susceptible to the market condition or market information. No, you have to be open about it. You shouldn't resist any information, but don't try to acquire each information that is present in the market, because most of the time that is not needed, and that can lead to confusion as well, right? What you want to do is become an expert at just one particular type of behavior pattern that repeats itself with some degree of frequency. To become an expert, choose one simple trading system that identifies a pattern, preferably one that is mechanical instead of mathematical, so that you will be working with a visual representation of market behavior. Okay, great. Your objective is to understand completely every aspect of the system, all the relationship between the components and its potential to produce profitable trades. In the meantime, it is important to avoid all the other possibilities and information. Ah, what is happening over here, man? Okay. Out of all the combinations of behavior possible, you are going to limit your focus of attention to just one combination. Consequently, you will be letting all the other opportunities go by. Starting small and gradually working into other combinations, is a real exercise and discipline that has a couple of important psychological benefits. First, you'll be building a base of confidence as you learn that you can, in fact, accurately assess what will most likely happen next. It is much easier to gain the confidence if you don't overwhelm yourself with the market's seemingly infinite possibilities. Second, by passing up other opportunities that you are not so expert in. Okay. You'll be releasing yourself from any compelling desire to trade. Any compelling behavior is usually the result of some fear. That fear in turn will cause you to behave in many inappropriate ways. If the idea of letting go of opportunities that don't fit into your framework is troubling to you, then ask yourself, what is the rush? If you are confident in your ability to transform yourself into a successful trader, what difference could it make that you let go of some opportunities not now for educational purpose? Once you learn to become the trader you want to be, you can then give yourself as much money as you desire. However, to get to that point, your objective should be to plan your development in such a way that you do the least amount of damage to yourself, both financially and psychologically. Then, after you have developed the appropriate skills, taking money out of the markets can be as easy as almost everyone believes it is before he started trading. Okay. If, on the other hand, so there is this, I need a lot of more pages, it seems. Just give me 1 second, guys. I have to add page in my slide and I have to, you know, do certain things. Okay. Hmm. Okay. If, on the other hand, you end up doing a lot of damage to yourself, you'll have to undo that damage before you can accumulate wealth as a trader. After the damage is done, it won't make any difference how much you learn about the nature of the markets or how well you learn to perceive an opportunity. There are many traders who end up becoming expert market analysts but can't make a dime as traders because of all the damage they did to themselves in the early part of their trading careers. What happens in these situations is a trader's past will generate so much fear that he won't be able to execute his trade properly or not at all, regardless of how well he learn to predict what the market will do next. Nothing is more frustrating than to know what is going to happen next and not be able to do anything about it. You need to understand that the ability to perceive an opportunity based on the quality of distinction that you can make and your ability to execute a trade are not automatic function of one another. Perception and execution are separate skills. They can and do work in tandem. All right. If there are no mental components blocking execution, otherwise the intent to take advantage of what you perceive as an opportunity may not have any inner support or the kind of inner support that is necessary to execute your intent properly. If there are mental obstacles preventing the proper execution of a trade, then learning how to perceive better opportunity is not going to solve the problem. So the object of this exercise is to help you learn how become an expert at stay healthy while you are doing it. And when you do become one, there will be much less standing in the way of your taking maximum advantage of your perspective skill per- perceptive skills, sorry. If you are already looking at or trading several markets and you are not successful or not as successful as you desire, then I would suggest that you scale back to just one market or two at the most. Don't expand until you thoroughly understand the market's characteristics. Okay, let's come to step 4. Learning how to execute a trading system flawlessly. The proper execution of your trades is one of the most fundamental components of becoming a successful trader and probably the most difficult to learn. It is certainly much easier to identify something in the market that represents an opportunity that than it is to act upon it. Okay, just give me 1 second. All right. It is certainly much easier to identify something in the market that represents an opportunity than it is to act upon it. However, there are some good reasons why it is so difficult to act on a trading signal other than what has already been identified as mental obstacle. To understand these reasons, you need to understand the nature of trading systems, defined as any methodology that consistently identifies an opportunity to buy or sell with a potential profit in some future moment, and how they interact with the markets and ourselves. Most good trading system, technical or otherwise, will take consistent money out of the market over the long run. Many of these good systems have been available to the public for years, and yet there's still a huge gap between what is possible and what almost everyone ends up with. The problem with trading system is they define market behavior in limited ways, when the market can behave in an infinite combination of ways. Systems mathematically or mechanically reduce relationships in human behavior characteristics to percentage odds of what could happen next. They can only capture a very limited number of these behaviors characteristics compared to the billions that are possible. Any identified pattern may or may not be repeating itself with respect to the way the pattern or relationship progressed when it was observed in the past. Therefore, we never really know if it is valid or not until it has actually completed itself. The big psychological problem here is that people have difficulty acting on opportunity with probable outcomes. Most people like to think of themselves as risk takers, but what they really want is a guaranteed outcome with some momentary suspense to make them feel as if the outcome had been in doubt. The momentary suspense adds the thrill factor necessary to keep our lives from getting too boring. When it comes right down to it, no one trades to lose. No one puts on a trade believing it is going to be a loser, and all systems will definitely have some percentage of losing trades. So it is difficult not to be tempted into trying to guess which ones are going to be the losers and not participate. As most of you reading this book already know, trying to outguess your trading system is an exercise in extreme frustration. Yes, been there, done that. Entering into random trades and ended up losing big. So yeah. Sometimes the system will give you signals to trade in ways that are completely contrary to your logic and reasoning. Sometimes the system will defy your reasoning and be right. And sometimes you will agree with the system and it will be wrong. You need to understand that technical reading systems are not designed to be outguessed. What I mean is, they aren't designed to give you isolated signal to an opportunity to be taken when it seems right. What they do is mathematically define, quantify, and categorize past relationship in collective human behavior to give you a statistically probable outcome of the future. As a comparison to trading, it is much easier to take risk and participate in a gambling event with a purely random outcome based on statistical probabilities simply because it is random. What I mean is, if you risk your money on a gambling event that you know has a random outcome, then there is no rational way you could have predicted what that outcome would be. Therefore, you don't have to take responsibility for the outcome of it isn't positive if it isn't positive. Whereas with trading, the future is not random. Price movement, opportunity, and outcomes are created by traders acting on their beliefs and expectations of the future. It is not random, right? Cannot apply the gambling rules in market. You can, but you'll end up losing. That's the basic idea. Every trader contributes to the outcome of the future by putting on and taking off trades in accordance with their beliefs. Because traders actually create the future by collectively acting on their beliefs about the future, the outcome of their action is not exactly random. Why else would traders try to outguess their systems? Unless they had some concept of the future and how that future will affect the markets. This adds an element of responsibility to trading that doesn't exist with a purely random event and that is difficult to avoid. This higher degree of responsibility means that more of your self esteem is at stake, making it much more difficult to participate. Trading gives you all kinds of ways to beat yourself up for all the things you should have or could have considered that would have resulted in a more satisfying outcome. Furthermore, you don't trade in in an information vacuum. You form your expectation about the future with information technical system don't take into consideration. Consequently, this sets up a conflict between your intellect says should be happening and the purely mathematical means of predicting human behavior afforded by your technical systems. This is precisely why technical systems are so difficult to relate to and execute. People aren't taught to think in terms of probabilities, and we certainly don't grow up constructing a conceptual framework that correlates a prediction of mass human behavior in statistical odds by means of mathematical formula. To be able to execute your trading systems properly, you'll need to incorporate two concepts into your mental frameworks. Thinking in terms of probabilities and correlating the numbers of the mechanics of your system to the behavior. Unfortunately, the only way you can really learn these things is actually to experience them by executing your systems. The problem is that rarely will the typical trader stay with the system beyond two or three losses in a row. And taking two or three losses in a row is a very common occurrence for most trading systems. This creates something of a paradox of or catch 22. How do you how do you do it if you don't believe it? And you won't learn to believe it unless you do it long enough for it to become part of your mental framework. This is where you employ your mental discipline to make flawless execution a habit. Now comes the exercise part. Hmm. So since, as I said it earlier, this is a long chapter, so shall we? Okay, let's go through it. Take some of the trading capital that you set aside for your education to buy and trade a simple trading system with well-defined entry and exit points. Make a commitment to trade the system exactly according to the rules. You need to make a very strong commitment here and not play any games with yourself. The object of this exercise is to work through any resistance you may have to be following your rules. The system does not have to be expensive. You can get one out of many of the books on technical analysis available today. I think it is important to buy one instead of devising one of your own because it might be a little easier to stay focused on the objectives of this exercise. With any system you devise, you're naturally going to want to make money. Save it for later. after you have learned how to execute properly. You also need to find a system that suits your unique tolerance for taking a loss. The amount of money you risk per trade should be an amount that you're completely comfortable with, at least at first. If you don't do stay within this tolerance level, you will be at very least uncomfortable. In which case, to whatever degree you are uncomfortable, you shut down the learning process. When you're feeling pain instead of focus being focused, it became here. Hmm. When you're feeling pain instead of being focused on what the market is teaching you about itself and yourself, you'll be focused on information that will ease your pain, which usually results in a painful lesson. Your objectives are: learn the skill of flawless execution by learning that you can follow the rules you set forth for yourself. I'm defining flawless execution as an executing a immediately upon a perception of an opportunity, inclusive within opportunity in the opportunity to exit losing trade, and to incorporate a belief that into your mental system that the nature of probable outcomes, so that you believe that you can make money in the long run with your trading system, if of course you can execute it properly. You'll likely encounter many beliefs arguing against flawless execution. Here are few suggestions to help you work through this resistance. First, understand that this exercise, at least for most people, is not going to be easy. So be easy on yourself. The more accepting you are of a mistake, the easier it will be to make the next attempt. If a child were learning how to ride a bike, I'm sure you wouldn't scold him for falling off and tell him not to try again. You would encourage him and eventually he'd learn. First, give yourself the same kind of understanding and consideration. Okay, so be easy on yourself first. The more accepting you are of your mistakes, the easier it will be to make the next attempt. Okay. Second, taking all the signals generated by your system is the only way you can get first hand experience. You need to establish a belief in probable outcomes and deleting the mathematics or the mechanics of the behavior. Okay. You have to do it in spite of your resistance, and you have to do it along. You have to do it long enough for the system to become a part of your mental framework. So I'm writing down the parts where I feel like I lagged it in the past, right? When that happens, you will have the force of habit working for you and the struggle will cease. Just do the best you can and look for ways to improve your performance. Constantly keep in mind that what you are doing is more of an exercise in learning trading discipline and the skills of flawless execution, which is the long run is far more important than your immediate desire to make money. So keep your contact size light. You can always increase it later when you have learned to trust yourself completely to always do what needs to be done without hesitation. Stay with the exercise until it becomes second nature or a part of who you are. As you gain in your confidence, you'll learn more and consequently learn how to make money as a trader. As you make money, you will gain in your confidence. The positive cycle will expand your ability to be successful as easily as negative cycle will feed on itself to end in despair. Okay. So far we have covered up till step 4, and we have 8 more pages till the end of the book, and there are like these things require more attention. So we'll cover this in the next video. from here onwards, from step 5 onwards. We'll cover it in the next video. So far in this chapter, what we have covered, let me just stop sharing here and I'll share what I have wrote so far. Right. Okay, let me just, I'll have to make it black, right? Hmm. So let me just share screen with you guys. I'll be able to say it what I'm trying to talk about. Okay. So this is the PPT that I have made of 7 pages. Let me just go through it quickly. To be a successful trader, so it's just like summary of whatever we have learned so far. To be a successful trader, you need to trade without fear, as you have learned already. When you use fear as a resource to limit yourself, you'll create the very condition you're trying to avoid. Or to say this another way, you'll experience your fears, right? So to become a successful trader, the gist is you have to trade without fears. Now, the next point, your individual history will repeat itself until you change your history, right? If you have had losses in the past, you will have to work on it until, like, you'll have to work on it, otherwise it will repeat itself. However, you'll need some resource to limit yourself so that you don't get reckless. Getting reckless is exactly what people have a tendency to do if they don't feel any fear, especially in if there is potential for thrilling results, as there is in trading. The resource you need to limit yourself is self trust. Don't go reckless. All right, it shouldn't be like you have no fear and you're just gambling into the market. You'll gain self trust when you establish a set of rules and guidelines to trade by, and know that you will always follow these rules without hesitation, regardless of the temptation you do otherwise. Okay, so set a set of rules, like make a set of rules and follow it. You'll gain that self trust when you establish a set of rules and guidelines to trade by, and know that you will always follow these rules under any circumstances without hesitation, regardless of the temptation to do otherwise. Okay, I have written it twice. Okay, no worries. Let's move ahead. As a trader, it is more important to know that you will always follow your rules than it is to make money. Because whatever money you make, you'll inevitably lose back to the market if you can't follow your rules. Right? For an example, today you took a random trade and you succeeded. Now, it gave you money in a short time, and it affected your mental framework also. So, in a longer run, next time if you'll enter in a random trade, let's say it didn't work out next time, so it will take the money that you want, and also it will take the money out of your pocket. So it will not be, helpful in a longer run. So don't enter in a trade, in a random trade, because it will affect you in a longer run for sure. You need to stay focused on mastering the steps to achieving your goal and not the end result. So work on the process, trust the process, knowing that the end result, money, will be a byproduct of what you know and how well you can act on what you know. The reason why we will cut ourselves off from the information is because we typically associate mistakes with pain. Okay, so never have this feeling that if you have committed any mistake, then like it is something you're not allowed to do. Please don't do that. We will instinctively avoid pain, and in doing so, also avoid that we need to know about ourselves to interact more effectively in similar circumstances in the future, right? Because when you'll, attach the mistake with pain, then you will try to ignore the pain. You will not try to confront it, right? And it will kill the very possibility of having growth or success in a longer run, is what we meant in this particular point. To evolve beyond pain and our fear of mistakes, our mistakes has to be resolved. Okay. Besides, there really isn't anything to miss because the markets are in perpetual motion. Okay, this is about FOMO. So whenever you are in market, you see the price, like the candle suddenly becomes a big bar green candle, and now you feel like, okay, I might miss this opportunity. You right jump in, and you not get the momentum, and you ended up losing the money. Besides, there really isn't anything to miss because the market are in perpetual motion and will continue to be until everyone agrees on values, which is not going to happen, As long as the price keeps changing, there will always be another opportunity waiting for you. When you release the energy out of the belief that it's possible to miss anything, you'll no longer feel compelled to do anything, something like getting into trades too early or too late. Then we talked about rules, set of rules. Predefine what a loss is in every potential trade. By predefine, I mean determine what the market has to look like or do to tell you that the trade no longer represents an opportunity, at least not an opportunity in the time frame in which you trade. Confront the possibility of being wrong and consequently not avoid the inevitability of taking a loss. So, confronting and accepting the inevitability of a loss is a trading skill, and you have to acquire it sooner or later. First is your understanding of why it is so essential to confront the possibility of a loss. If you don't, you'll generate fear and end up creating the very experience that you are trying to avoid. Losses do not diminish me as a person. The sooner you believe it, the easier it will be to identify and execute a losing trade. By making the execution of a losing trade an automatic function of your trading strategy, you make yourself psychologically available to take advantage of the next opportunity, even if that opportunity is in the same direction of of the losing trade that you just go out of. Execute your losing trades immediately upon perception that they exist. When losses are predefined and executed without hesitation, there is nothing to consider, weigh, or judge, and consequently nothing to tempt yourself with. There will be no threat of allowing yourself with the possibility of ultimate disaster. If you find yourself considering, weighing, or judging, then you are either not predefining what a loss is for you, or you are not executing them immediately upon perception. In which case, if you don't and it turns out to be profitable, you are reinforcing an inappropriate behavior that will inevitably lead to disaster. This is very, very, very important. Let's say you decided a certain loss. Okay, you decide, okay, at this point I have to get out of the system, I have to square off my position, because at this point my logic to enter in the trade is, what I can say, it is not working anymore. But you still holds it for a little longer, and it turned out to be positive. So now in this trade, maybe you became profitable, but it has an impact in your psychology that will lead to an inappropriate behavior, and it will, you know inevitably lead to disaster in future. Been there, done that. Once you completely trust yourself to cut your losses, you'll eventually get to the point where you may not have to predefine what a loss is. Keep in mind that fear is really the only thing that keeps us from learning anything new. By predefining and cutting our losses short, you're making yourself available to learn the best possible way to let your profits grow. More is not better. It just creates confusion and overload that will ultimately lead to losses. To become an expert, choose one simple trading system that identifies a pattern, preferably one that is mechanical instead of mathematical, so that you will be working with a visual representation of market behavior. First, you will be building a base of confidence as you learn that you can, in fact, accurately assess that will most likely happen next. It is much easier to gain the confidence if you don't overwhelm yourself with the market seemingly infinite possibilities. Second, by passing up another Okay, I'll have to make it a other point. Second, by passing up other opportunities that you are not an expert at yet, you will be releasing yourself from any compelling desire to trade. Any compelling behavior is usually the result of some fear. That fear in turn will cause you to behave in what I can say, many inappropriate ways. If the idea of letting go of opportunity that don't fit into your framework is troubling you, then ask yourself, what is the risk? If you're confident in your ability to transform yourself into a successful trader, what difference could it make that let go of some opportunities now for educational purposes? Okay, so FOMO entry is what I'm talking about over here. Let it be, right? Market has a lot of opportunities. Wait for the right one according to your system and then enter. It will help you in longer run. The proper execution of your trades is one of the most fundamental components of becoming a successful trader, and probably the most difficult to learn. As most of you reading the book already know, trying to outguess your trading system is an exercise to extreme frustration. Technical trading systems are not designed to be outguessed. What I mean is, they aren't designed to give you isolated signals of an opportunity to be taken when it seems right. What they do is mathematically define, quantify, and categorize past relationship in collective human behavior. or give you a statistically probable outcome of the future. So even if your system comes in, check if the market sentiments are in the same direction, similar direction, then only enter. Because your system is not a short proof. It is just based on the previous data, like it happened in the past, so it can happen again. It is just giving you a probable outcome. Whereas with trading, the future is not random. Price movement, opportunity, and outcomes are created by traders acting on their beliefs and expectation of the future. How do you do it if you don't believe it? And you won't learn to believe it unless you don't do it, unless you do it long enough for it to become a part of your mental framework. There is where you employ mental discipline to make flawless execution a habit. The amount of money you risk per trade should be an amount that that you are completely comfortable with, at least at first. If you don't stay within tolerance level, you will be at the very least uncomfortable, in which case, to whatever degree you are uncomfortable, you start down the learning process. That means if you lose more, it will not just give you financial burden, it will give you mental burden, and it will shut down your learning process as well. When you're learning pain, when you're feeling pain, instead of being focused on what the market is teaching you about itself and yourself, you'll be focused on information that will ease your pain, which even usually result in a painful lesson. Hmm. You'll likely encounter many beliefs arguing against flawless execution. Here are few suggestions to help you work through the resistance. First, understand that the exercise, at least for most people, is not going to be easy. So be easy on yourself. Second, taking all the signals generated by your system is the only way you can get the first-hand experience. You need to establish a belief in probable outcomes and relating the mathematics of the mechanics of the behavior. You have to do it in spite of resistance, and you have to do it long enough for the system to become part of your mental framework. Stay with the exercise until it becomes second nature or a part of who you are. As you gain in your confidence, you'll learn more and consequently learn how to make money as a trader. As you make money, you'll gain more confidence. This positive cycle will expand your ability to be successful just as easily as a negative cycle will feed on itself to end in despair. So feed yourself the right things and you'll become healthy in short way. Right. Okay. So that is it. On this note, let's just end this video, and in the next video we'll continue with the step 5 or rule 5. Okay. So these are the things that we have learned over here, like how we can be more prepared as a trader, right? So thank you so much if you have come this far. So thank you so much for listening out. I hope it became it was helpful for you in one way or another. So yes, have a great day ahead. And thank you so much, universe. Thank you so much, Radharanji. Peace out. Have fun.